Hey there, I'm Joe Massey with Castle & Cooke Mortgage, and I specialize in helping real estate agents and home buyers learn about different options for how they can purchase properties, how much money they need to put down, what type of loan programs are out there, how they can become homeowners, and I like to dispel a lot of myths, a lot of rumors, and really get to the truth of how home buying works and how you can buy your first property, your second property, maybe even your 10th property. So what we're going to talk about today are low down payment options. A real common misconception in the mortgage market today is you have to have at least 20% down in order to purchase a new property. It's actually one of the largest barriers that young people have to purchasing their first property. And so today we're going to talk about that. I'm going to show you some options for low down payment, show you how you can buy that first property. And I think you're going to be surprised by some of this as we go through and discover this together. The amount of money that you need to purchase your new property is probably quite a bit less than you think. So again, my name is Joe Massey, and I'm a senior loan officer with Castle & Cooke Mortgage. And what we're going to be talking about today are low down payment options to help you buy or help your clients buy their first property. So how much do you need to buy a property? You know, the common misconception is you need 20% down. All right. If you want to buy a $500,000 home, that means you have to save up $100,000. Or if you want to buy a $600,000 home, that means you need to save up $120,000. Well, let me tell you something. Nothing could be further from the truth. All right. A lot of my clients do put 20% down, but I also have some clients that do no money down, $1,000 down, 3.5%, 5% down, and that's really what we're going to dive in today. So we're going to go through all of these various loan programs that we've got here. We're going to start up here at the top with the lowest money down and then work all the way down here to the bottom on some conventional loans and other options if you want to put a little bit more money down. So let's jump in and talk about this. First program we've got here, VA. All right, VA stands for the Veterans Administration. All right, a lot of people have heard of VA. What is it? It is a loan program that's available for qualified veterans and active service members only. All right, so it is kind of a limited subset. Not everybody can qualify for this. So for example, I was not in the military. I'm not a veteran. It's not a loan program that I could qualify for. But if you were in the military or served in the reserves or the Air National Guard or lots of different services throughout the armed forces, you could potentially be eligible for a new VA loan. Now, what are some of the big benefits? Number one, no money down. All right, you can purchase a property with as little as $0 down. And here's a really cool feature, no monthly mortgage insurance. All right, so serving in the military gets you a lot of benefits. Now, there's some trade-offs, right? You have to be in the military. You've got to follow orders and do a lot of the things that you have to do in the military. But when you get out or while you're still active, you can purchase a property with no money down and no monthly mortgage insurance. So it's really a great benefit for somebody buying their first property or second property or maybe even third or fourth time they're buying a property. But there's some trade-offs. Number one, there is an upfront funding fee. All right, so the very first time you use your VA benefits, you're going to have 2.3% of the loan amount included into the loan for the first time you use your VA benefits. And then if you sell that property and you buy another property in the future, you will have that funding fee again, but it'll be a little bit higher if you make a no money down transaction. It'll be up to that 3.6% for all future use. However, if you do receive any sort of VA disability, it is waived. So if you're a disabled veteran, you do not have to pay that funding fee. Now, what is this funding fee? It is the cost that goes to the Veterans Administration for overseeing the program, for administering the program, and that also covers losses in the event of a foreclosure, things like that, that the VA might incur. Now, sample interest rates, all right, as of today, VA has the lowest available interest rate in the market, right at 6.25% as of today. Now, depending on when you're watching this, may have changed, could be a little higher or lower, but I will tell you that VA interest rates are always the lowest available. And this is, of course, for a 30-year fixed, which is something that I always recommend. Now, really cool thing about VA, maximum loan, there is no maximum loan amount. All right, so you could find a property that costs $1 million. And as long as you can afford the principal and interest and tax and insurance payment, you could qualify for that home with as little as no money down. So this is really a great program for anybody that served in the military. It's a benefit that those folks have earned. We do a lot of VA loans here at Castle & Cooke Mortgage. It's really a great plan that some folks are not familiar with. And real estate agents out there, this is a great question that you can always ask your buyers. Hey, did you ever serve in the military? Maybe you should talk with Joe about a VA loan. All right, so this is a great plan that you should be aware of, again, with as little as no money down. Now, let's go back to our main slide here and talk about our next option, USDA. All right, when you hear USDA, what do you think of? The Department of Agriculture. All right, you think of corn and wheat and steak and things like that. Well, interestingly enough, they actually have a loan program. And the USDA loan program is for specific rural areas. All right, it's for specific areas. And the way you find out if your property is in the eligible area is you go to this website right here and you type in your address and it'll pull up a map, and it's going to look real similar to Google Maps, and it's going to give you a little icon that says this property is eligible or this property is ineligible. Now, why is it important to know if that property is eligible or ineligible? Well, here's one of the cool things about USDA. No money down. All right, so you can buy a property with no money down in a specific USDA qualified area. The other big benefit is really low mortgage insurance. All right, so it does have mortgage insurance and it has an upfront guarantee fee, really similar to FHA mortgage insurance, but that monthly mortgage insurance is reduced as compared to FHA. So really a great plan for folks buying in rural areas. Now I've got a map over here on the right-hand side, and you might be asking, well, what's this map indicating? Well, the areas that are in red in this map are ineligible areas. So what do you notice about the state of Colorado? A very, very large percentage of the state is eligible, all right? That means if you've got somebody that's buying out here in Lyman or in Strasburg or maybe out here in Glenwood Springs, those folks could qualify for as little as no money down. Now, if you have a client or if you're a home buyer and you're saying, hey, you know what, Joe, I want to buy a new condo right here in downtown Denver and I want to use that USDA loan so I don't have to put any money down. Sorry, that would not work. You do have to be in an eligible area, which again is everywhere that is not highlighted in red. So really, really big percentage of the state of Colorado is eligible for this financing. Now, sample interest rates, again, as of today, real similar to VA, 6.25%. Now, this can fluctuate depending on your credit score, depending on the type of property, etc., but really, really a great benefit for folks buying in these rural areas. However, there is a maximum income limit, and it does vary by county. All right, so it is for specific rural areas, but it is also for low to moderate income earners. So if you're someone that makes $200,000, $300,000, $400,000 a year, this is probably not the right program for you. So there are specific guidelines that we have to follow. You can also find that information on this website, or most importantly, call me and I'll take a look at your individual situation and make sure that you're eligible for something like this. But if you make too much money, we would have to talk about one of our other programs, maybe putting down a small down payment or some of our other down payment assistance programs. And one other important caveat, the buyer may not own any other property. So you don't have to be a first-time buyer, but you can't own anything else. So if you already have a property, maybe in Denver, and you're saying, hey, you know what, I want to move out to Strasburg, for example, and I want to find a property out there, and I want to use USDA financing, we can help you with that, but you would have to sell that existing property first. Okay, so USDA, great plan. We do a number of these. Some of our other states like Nebraska and interestingly enough, Hawaii, we do a ton of USDA transactions. So really a great plan for folks that want to purchase with low money down. So let's take a look at our next plan. All right, CHENOA. This is a really, really great plan. Again, allows you to purchase with as little as no money down. So pretty cool program. This is something we actually have direct right here at Castle and Cooke Mortgage. When I say direct, meaning we don't have to send it out to any third parties to look at it. We don't have to ask permission from an independent agency. This is all done right here in-house with my team right here at Castle and Cooke Mortgage. So number one thing, this is available for all counties in Colorado. All right, so you'll remember on USDA there was some ineligible regions. CHENOA, you can use this anywhere. And this would be with as little as $0 down. And this can be in the form of a grant or a second mortgage. Okay. Now, a lot of folks say, hey, this grant sounds like a great idea because I want to get free money for the down payment. Well, it's really important to understand all of the programs we're going to talk about, everything we're going to look at today, there's really no such thing as free money. If you think back, do you ever hear that phrase, there's no such thing as a free lunch? Well, that's true in lending as well. There's ways that we can work with you, ways that we can help you, but ultimately you may have some trade-offs if you're doing a grant or if you're doing this second mortgage. So let me show you what some of those trade-offs are. Number one, this CHENOA Down Payment Assistance Program. It'll be an FHA first mortgage, which we're going to talk more about, and you will have that upfront mortgage insurance and that monthly mortgage insurance that's going to be financed into the loan. Now it says annually because that's how much it is on an annual basis, but it is paid as part of the monthly payment. Now here's one of the trade-offs. Slightly higher interest rate. Okay, when you're putting less money down or you're using a down payment assistance program or a grant or a second mortgage, that's often the way that those grant funds or second mortgage funds get repaid is through that slightly higher interest rate. But that doesn't mean it's a bad deal. It just means you need to understand there's pros and cons to it. This is a great plan, again, for folks that have not been able to save up that down payment. This is a great way that they can get started even with really low money down, again, as low as $0. Now, here's another cool thing. There is no maximum income. So you could make $200,000, $300,000, $400,000 and maybe you just haven't been able to get over the hump and save up a down payment. This program could potentially work for you. The other really neat thing about this is maximum loan amount. All right, here in the Denver metro area, the maximum loan amount is $787,000. All right, so you can buy a property for $800,000, let's say, and you would get your FHA loan for $787,000, and then the grant or the second mortgage would help you with that down payment assistance. So this could be as little as zero money down. Now, a really important point, this maximum loan amount does vary by county. All right, so if you're in maybe Weld County or maybe Huerfano County or some of the counties in Pueblo County, it will be different, but for Denver metro area, you're looking at that $787,000. If you want to know the limit in your specific county, call me. We'll be happy to chat with you about it. The other neat thing about this, there is no home buyer education required. All right, we're going to talk a little bit more about that on some of our other programs, but for our CHENOA grant or second mortgage, the buyer does not have to go through any type of home buyer education. However, similar to USDA, the buyer may not own any other property. This does need to be their only property that they're owning currently. But again, like that example I used before, if you've got a property and you're selling it, once that sale closes and you want to buy something new, you can absolutely do that and use this down payment assistance plan. So really a great option for that no money down buyer that's wanting to invest as little as possible. Now let's talk about our next plan, CHFA. All right, really a great plan that actually gets utilized quite a bit here in the Denver metro area. So this stands for Colorado Housing Finance Authority. So really great folks. If you've ever been to a Rockies game, you've probably seen their headquarters. It's like right across the street from Coors Field. They do a great job there at CHFA. Real similar to CHENOA, it is available for all counties in Colorado. And this one does have a little bit larger down payment, $1,000 minimum down payment. And this can be in the form of a grant or a second mortgage, similar to CHENOA. Now, again, it's going to be a regular FHA first mortgage with that upfront mortgage insurance and that 0.55% annual mortgage insurance paid on a monthly basis. Now, really neat thing about CHFA, they also have a conventional loan. All right, so sometimes you'll be looking at a condominium and you'll say, boy, I really like this project, I really like this condo, but it's not FHA approved. And I actually teach a class on condominium financing, but let's just touch on the tip of the iceberg just a little bit. You're looking at a condo and it's not approved for FHA financing, but you say, I really like it. What are some other options? We can actually use CHFA down payment assistance with a conventional loan. All right, so this is a great option if you happen to find a condo that is not FHA approved. One other really nice thing is CHFA has funds that are always available. Some down payment assistance plans can run out of money, depends on how they're funded. Sometimes they run out of money later in the year, and you might have some troubles closing in November, December. With CHFA, you never run into that. They do always have funds available. Now, their interest rates are a little bit lower than CHENOA, which was the last scenario that we looked at. Again, can fluctuate a little bit depending on your credit score, depending on the type of loan, depending on the date that you're watching this. But 6.75, a really good sample interest rate for a 30-year fixed as of today. Now, CHFA does have maximum income limits. All right, so in most counties in Colorado, it is $148,000. So a lot of folks ask me, they say, well, Joe, why is there a maximum income limit? Like, what's the point of that? Well, the reason is these programs are really designed to help the underserved. So folks that haven't been able to save up for a down payment, folks that can afford a monthly payment but just haven't quite been able to get over the hump to save up a down payment to purchase a new property. And that's part of the ways that they make sure that this is meeting their mission and serving the underserved is by having some of those income limits on there. But I think we can all agree $148,000, that's a pretty sizable number for maybe a husband and wife or two fiancés or boyfriend, girlfriend to be earning. So still a lot of folks can qualify for this loan program. Now their maximum loan amount is a little bit less. In the Denver metro area, $726,000. All right, and again, that can vary by county. Really just depends on where you're looking. And a lot of folks say, well, Joe, how will I know? Give me a call. That's my whole job, is to make sure you're looking at the right loan program for you. Now, you do have to attend a home buyer seminar, but really cool feature. They offer it in person or online. I'll tell you something about this too. A lot of times I have clients that are like, Joe, I don't want to go to a home buyer seminar. Joe, I know how to pay my bills. And I'll say, hey, I understand that, but to qualify for this program, to get these grant funds or this second mortgage, one of the requirements is to go through this home buyer seminar. And the client will say, okay, and they'll go through it and they'll send me a certificate, the next day or 2 or 3 days later once they complete the class. And I always call them and say, hey, how was the home buyer seminar? And you know what? 100% of the time I get positive feedback. They always say, you know what, Joe, it was really informative. I actually learned a lot, learned some things that I didn't know. And I've had home buyers that have owned 1 or 2 or 3 homes use this program and go through this online seminar and actually learn some stuff. So if you have an opportunity to take one of these home buyer seminars, I think you'll learn a lot. I think it'll be really helpful for you. One other really cool thing about CHFA: the buyer may own one other property. So back to the example I used earlier, let's say you have a property in Denver and you want to sell that and buy a new property. Well, in some of the other plans we looked at, you would have to sell that property first and then close on this new purchase. In this case, you would not have to do that. You could do the CHFA first FHA mortgage followed by a grant or followed by the second mortgage and still own that other property. Then you could decide to rent it out or you could sell it at a later date. One of the really nice flexibilities about CHFA is they understand, kind of how the market works, and sometimes you've got some equity tied up in that property. So they have this really nice flexibility that you may own one other property while getting your new CHFA loan. So really a great program. We do a lot of CHFA financing. Definitely something that you should consider if you're thinking about purchasing your first property and don't have a ton of money down. All right, let's look at our next scenario, CHAC. All right, this stands for the Colorado Housing Assistance Corporation. All right, really great folks over at CHAC, super helpful. They do a great job over there. This is available for all counties in Colorado, and the buyer must be a first-time home buyer, or sometimes you'll see this expressed as FTHB, meaning first-time home buyer. All right, big benefit. $1,000 minimum down payment, and that's funded with a second mortgage. And it's going to be a standard FHA first mortgage with that upfront mortgage insurance and then that annual premium paid on a monthly basis. Really cool thing about CHAC, a little bit lower interest rate on the first mortgage, and they have really good preferential interest rates on the second mortgage. Again, this is all as of today. Depending on when you're watching this, could be a little bit different. But one of the challenges is they do have maximum income limits statewide, and it's determined by the number of people in the household. All right, so if you're a single person, your income limit is $94,000. Or if you are a husband and wife, your income limit is $107,850. So if we compare that to CHFA, the last program we looked at, it's a little more difficult to qualify for CHAC, or if you make too much money, it could kick you out of the CHAC program, and we may have to talk about CHFA or CHENOA or one of our other programs. Now, I know a lot of folks say, boy, this is tough. How do I keep track of all of this? Well, I don't want you to keep track of it. That's my whole job, is to keep track of it and to help walk you through, Mr. and Mrs. Client, here's the options that may work for you. Or if you're a real estate agent and you're like, man, Joe, this is a lot of stuff to explain. I totally understand that. That's my job, to work directly with the buyers and help them understand these are the steps you've got to go through. These are the various programs, and really break it down and make sure they understand exactly what they're looking at. So don't try and memorize all this. This really is just a high level overview for you. And when you really get into the details, call me and I'll be happy to help. Now, one other important point about CHAC is you do have to attend a homebuyer seminar. Now, they used to require this in person, but I did get a few people that were doing this online. So I think this might be a little bit outdated, that they no longer require it in person, but I haven't been able to 100% verify their guidelines on that. So assume it may be in person, but there might be options for online. We'll just put a little question mark there for online. I believe it's possible, but not 100% sure. And then similar to some of the other programs, the buyer may not own any other property, which makes sense, right? Because we said the buyer's got to be that first-time home buyer. All right. So CHAC, great folks that work there. We have a great partnership with them. They really do an amazing job in helping these first-time home buyers. So let's go back to our main slide here. So a lot of these are all of the different down payment assistance programs that we work with. We do a number of these transactions every single month, every single year. And a lot of folks forget about a couple of other plans. All right, the first one we're going to look at is FHA with this minimum 3.5% down payment. Now, FHA stands for the Federal Housing Authority, and it is eligible for primary residents, meaning you're a first-time buyer or you're a non-first-time buyer. So you're selling one property. Let's say you're moving here from, I don't know, Michigan. You have a property in Michigan and you're selling it, and you're moving here to Colorado. So you are a non-first-time home buyer. That's okay. You can still use FHA to purchase your new property. And FHA actually works for purchase transactions as well as refinance transactions. So I have other classes where we talk about refinancing and pros and cons of that, but just kind of file it away that you can use this to buy a home or in the event that you need to refinance at some point in the future. So interest rates on FHA, always really low, right at 6.25% as of today. Again, depending on when you're watching this, could be a little higher or lower, could be a little higher or lower depending on your own preferences, credit score, etc. Now, down payment is that minimum 3.5% down. So now it does have mortgage insurance, that upfront, and then that annual premium paid on a monthly basis. But one really cool thing about this, no maximum income. So you might make $300,000 a year, or you and your spouse make $400,000 a year. There is no income restrictions on FHA. So you can qualify for a new FHA loan no matter what your maximum income is. If you make $300,000, $400,000, $500,000, you could potentially qualify for this FHA loan. But there are, however, maximum loan amounts. All right, $787,000 here in the Denver metro area, and then this does vary for other counties. All right, so the 7-county metro area is that $787,000, but if you're in Pueblo County, it's a bit lower, or if you're on the western slope, it's a bit lower. So how do you know? Just give me a call, and we'll look at it with you for specifically where you're wanting to buy. Now, one really cool thing about FHA, this is the easiest loan program to qualify for. Now, what do I mean when I say it's easy to qualify for? There's a lot of flexibility around your prior work history. There's a lot of flexibility around your credit score. There's a lot of flexibility around the type of income that you earn. Now, it doesn't mean if you have bad credit and you have no income and you had a bankruptcy yesterday, doesn't mean that you can qualify for that. That's not what I'm saying. But it does mean that there's some flexibilities for this as compared to some of our other loan programs. And no homebuyer seminar required. Now, you can take one optionally if you want to, but it is not required if you don't want to do that. So now let's say we want to buy this property and the home price costs $500,000 and we're going to put down this 3.5%. Well, that is $17,500 as our down payment. Now, that is certainly higher than the 0% or $0 down on VA. It's certainly higher than the $0 down on USDA and CHENOA. It's certainly higher than, the $1,000 down on CHFA or CHAC. But you know what? It's not 20% down, because what if we were doing 20% down? We would have to have $100,000. All right, is it going to be easier or more difficult to save up $17,000 or to save up $100,000? I certainly think it's going to be easier to save up that $17,500. So, big important point here with FHA is look at all of the pros and cons. Do we want to buy a house today with less money down, or do we want to spend another year, 2, 3, 5 years trying to save up that $100,000? I'm not here to tell you which one is right or wrong. I just want to share and give you ideas to see if it might make sense for you, or for real estate agents out there, does it make sense for your clients? So FHA can be a really great option. We still do anywhere from 15 to 18% of our loans every month are FHA transactions, and this is a great way to buy that first property, second property, third property. Even if you're not a first-time home buyer, this can be a great choice for you. All right, we're moving down the slope here, and now we're going to talk about conventional loans. All right, and there's actually two options that we've got here on conventional for 3% and 5%. So let's start with this 3% down option. So conventional 3% down is for first-time home buyers. All right, now we didn't touch on it earlier, but a first-time home buyer is somebody that has not owned a home within the last 3 years. So maybe you owned a home 10 years ago, you lived in it for 4 or 5 years, and you sold it, and then you've been renting because you got relocated for a job, or you moved for family or something like that, but you have not owned a home in the last 3 years. Well, you regain that first-time homebuyer status, allowing you to purchase with as little as 3% down. So again, this is a purchase transaction with that 3% down payment, and monthly mortgage insurance is optional. All right, now if you're putting down 3%, you will have some type of mortgage insurance, but you could do monthly. You can pay it one time up front at the time of the closing, or you could even have us pay it for you. It's called lender paid mortgage insurance. Now there's pros and cons to each of those. If you pay it monthly, you might have a slightly higher payment, but maybe a little bit lower cash due at closing. If you pay it up front, you might have a lower monthly payment, but you might have a little bit higher closing costs to pay that upfront mortgage insurance. Or if you choose this third option, lender paid, remember what I said earlier, there's no such thing as free money. Well, we can pay the mortgage insurance for you, but there might be a trade-off in the form of a higher interest rate or maybe higher closing costs in order to do that. How do you know which one is the right one? That's where I come in, and I'll go over that with you or with your clients and look at all of the choices and let you or let your client pick and say, hey, this is the right one for me. Now, sample interest rates, conventional 3% down, still really, really beneficial, 6.75%. Not as low as some options, not as high as some options, but just really a great choice for somebody that's been able to save up that 3% down. There is no maximum income limit. So real similar to FHA, you can make a ton of money and qualify for a conventional 3% down. And here in the Denver metro area, that maximum loan amount, $787,750. Now though, one really important point for this 3% down, you do have to do a home buyer seminar. You can do it online or in person, and it takes a few hours. And back to what I mentioned earlier, always get really, really positive feedback. People are always really happy and really enthusiastic about what they learn in that class. So let's go back to our example and say we're buying a $500,000 property times 3%, meaning we've got to have $15,000 down. Now, is $15,000 down a lot of money? Yes, it absolutely is. I'm not here to tell you that $15,000 is not a lot of money, but it's a heck of a lot less than that $100,000 for 20% down that we were talking about earlier. So this can be a great option for folks, again, haven't quite gotten enough money to have that 20% down. That's okay. It's not required to have 20% down. Can be a really great option to help you buy that first property. So let's go back to our slide here and let's look at our last program, 5% down. All right, a lot of folks forget about this plan, but it can be a great option. So 5% down conventional. This is eligible for all primary residents. All right, so you can be a first-time home buyer, non-first-time home buyer. You can use this to purchase your property. You can use it to refinance your property, and it is that minimum 5% down payment. And back to what we said earlier, you can pick your mortgage insurance. You can pay it up front, you can pay it monthly, you can do it lender paid, and that is going to vary depending on your credit score and down payment, just like we discussed with the 3% down option. But one of the nice things about 5% down, you're going to have a lower interest rate. So it's always about 1/4 to 3/8% less than that 3% down option. And maximum loan amount, up to that $787,750. And really cool, there is no home buyer education required. So let's go back to our $500,000 example. Times 5%, that is $25,000 down. All right, now that, again, that's not a small number, but it's a heck of a lot less than if we're putting 20% down. So one really important thing that we do with every client is have a conversation and sit down with them and say, hey, do we want to put down 3%, 5%, 10%, 20, 40%? What's going to make sense for you, Mr. and Mrs. Client? And the more money you put down, sure, the lower your monthly payment is going to be, but maybe you need to keep some of that money back to do renovations or moving expenses, or we've got to make some changes and buy more furniture or window coverings or whatever it might be. This is a great option that really gives you those choices so that you can customize and select the loan program that makes the most sense for you and your individual situation. All right, we've made it all the way down our slope here. Which loan is the best option? All right, which one is the one that we should say, you know what, Mr. Client, you should always do loan program, fill in the blank. Or Mr. Real Estate Agent or Mrs. Real Estate Agent, you should always recommend loan program, fill in the blank. Well, let's look. Let's compare all of these options. So let's say we've got that $500,000 price range that we discussed earlier. All right, and I've got each of our programs here on this chart. We've got VA, we've got USDA, CHENOA, CHFA, CHAC, FHA, conventional 3% down, and that conventional 5% down. So let's start with which one has the lowest down payment. Well, pretty easy to see. That's going to be these guys here that require no money down. Well, which one has the lowest interest rate? So let's pause for a second and say, boy, that's going to be these ones here at 6 1/4, 6 1/4. What about lowest mortgage insurance? All right, we've got VA all the way over here with no mortgage insurance. Conventional 5% down, as little as $150 of mortgage insurance. What about the lowest principal and interest payment? All right, kind of makes sense. The loans where we're putting more money down have a little bit lower principal and interest payment. Lines up. But what about lowest total payment? All right, what you see again kind of makes sense. The ones where you're putting the most money down, or VA where you've got no mortgage insurance, are going to get you the lowest payment. So which loan is the best one? Should the client always pick FHA, or should the client always pick conventional 5% down, or should the client always do CHFA, or should the client always do VA? You know what? It's going to be completely up to the client, or if you're a home buyer, it's completely up to you. And you're going to want to select based on your individual down payment savings, based on your monthly payment goals and other program restrictions. Maybe you make too much money to qualify for CHAC, but maybe CHFA is still really a great option. Or maybe you make too much money to qualify for CHFA, so we're going to look at FHA. Or maybe you say, you know what? I was in the Air Force for 5 years or 6 years or 10 years. I really want to do VA and take advantage of my VA benefits. All of these are going to be great options. All right. The most important thing that you want to do is understand you don't have to have 20% down. All right. That nothing could be further from the truth. And I hear a lot of young people, even a lot of experienced homeowners say, you know what, Joe, I really want to buy another property, but I don't have that 20% down. Hey, that's okay. You don't have to have that. And that's a big part of what I do, is try and dispel that myth and that rumor. You don't have to have 20% down. So I hope this has been helpful for you today. Last slide here. I just want to remind you everything that we do here at Castle & Cooke Mortgage, everything we've talked about today, FHA loans, VA, USDA, jumbo, investor cash flow loans. We didn't even touch on those today because those are more for investment properties rather than low down payment. But we can help you purchase a home, refinance. We can help with your primary residence, second homes, investment properties, even second mortgages, home equity lines of credit. We can help with that. All of my information is over here. Feel free to call, text, email, reach out anytime. Would love to chat with you. Of course, don't forget our website, loansbyjmassey.com. And if you want to plug in scenarios and use your own mortgage calculator, you can scan this QR code right here. That'll take you directly to our calculator app. You just put in a little bit of basic information, and then you can type in a purchase price, how much you want to put down, and it'll adjust with sliders how much your payment is going to be, how much your taxes and insurance are going to be. And then real estate agents out there, what are some things that we can do to help you? Well, we've got our #1 8-day closing service. It's the fastest permitted by law, that you could go under contract today. I meet with the client today and we will close on that transaction 8 days later. So that's been a really great service that we've used over the years to help folks get under contract. Our average approval time frame for that final clear to close is 21 days. I actually need to update this slide. It has actually gone down recently to 19 days. So we are actually going faster than the industry average by, more than 100% faster. We have our 100% pre-approval record, meaning if your client gets pre-approved with us, that loan will close. We make sure to do all of our due diligence and all of our homework right up front. We also have a great partnership with HomeBot that helps you keep your clients updated and filled in on the value of their home, what's happening with their equity, and how they might be able to use that equity. Of course, our e-flyers to help you with listing your properties, and our single property website service. And then exactly what you're doing here today, all of our classes, we teach them in person and online. And we're always happy to share knowledge and education with all of our real estate agent partners as well as home buyers out there. I hope this has been useful for you. If you have questions, want help, want to just chat about your individual situation, please call, text, email. Make sure to follow us on Facebook, Instagram, LinkedIn, and even on our TikTok channel. Share a lot of this great information out there and would love to chat with you anytime. Have a great day.